Hello, this is Hall Martin with Investor Connect. Today we're here with Paul O'Brien of Media Tech Ventures. Paul, thank you for joining us.
I'm thrilled to be here, Hall. Thank you. Good to hear from you again.
It is. We've known each other for a long time. Glad to have you here with us today, and wanted to have you tell us a little bit about yourself and about Media Tech Ventures and what it's all about.
Yeah, my pleasure. My pleasure. Yeah, we have known each other for, what's it been, 6 or 7 years? I've been in Austin for about 8 years. Spent about 12 before that in Silicon Valley. So I'm cut from that cloth as far as Texas is concerned. One of those guys from California. I've worked in this industry my entire life. I got recruited to Yahoo right out of school back when Yahoo was the place to be. Still had a little tiny office in Sunnyvale and sleeping bags in our cubes. And so I got thrust right into that early internet valley startup culture and spent the remainder of my time there working with corporations a little bit as a part-time marketing consultant and professional, but for the most part, worked on behalf of the venture capital community there to help get startups off the ground.
Well, that's great. Now you moved to Austin. Why did you come to Austin?
Cancer and mortgage crisis, frankly, is how I tell the story. It was, nine years ago or so was the last big financial crisis and downturn of the market. And along with that came the mortgage crisis. I had just gotten into our first home in Los Gatos, California, which is not an inexpensive place to be. And suddenly on paper, we lost a lot of money. And I got diagnosed with cancer, frankly, not a serious kind, knock on wood, and survived that. But at the same time, had my third child on the way. I've got 3 kids. And so I looked at my wife and just thought, we didn't grow up in Northern California. We're not cut from the same cloth as Silicon Valley. Professionally, I like it here, but personally, something's missing. Where are we going to go? And I turned to the venture capital community and said, where would you like me to go? And believe it or not, now this is before Austin became the massive startup community that it is, but before the explosive growth thanks to Capital Factory and Mass Challenge and venture capital firms opening up here. And so at the time, Austin wasn't on the list. At the time, I heard Chicago and Denver and even Dallas. And we spent a couple weeks in Dallas, kind of settling on Texas as a place we'd like to be since I grew up in the Midwest. I grew up in Michigan. Felt that Dallas wasn't quite right. Came to Austin on a whim, almost as a last-ditch effort that we had to find a place to be, and fell in love with it. Fell in love with the hill country, fell in love with the music scene, fell in love with the people, the friendliness of the people. My wife tells a story about how she was shocked to walk into an HEB to pick something up, and the person checking her out at the register had a conversation with her. That was foreign to her.
First time in a while.
Yeah, so we fell in love with it. And as I recall, we moved about 6 weeks later. Rather sight unseen. I mean, of course, we'd been here for a weekend at that point, but rather sight unseen, no real plan as to what to do. Just certain that Austin was the right place to be and settle and raise some kids.
Well, that's great. That's great. Well, you've done a lot of things since you've come to Austin, and you've always been a big champion of funding and really doing the big ideas and so forth. And now you have Media Tech Ventures. Can you tell us more about that?
Yeah, so Media Tech Ventures is actually one of those experiences. About 4 or 5 years ago, I started doodling on this question of why the Texas Venture Development Fund, which was a state-run venture fund, and at the same time, the Texas Entertainment Incentives were both being mixed. I was looking at the state as a region for entrepreneurship, and I was intrigued by the fact that in spite of a lack of substantial venture capital in Texas, the state's own attempts to fund things, both in the creative class with the entertainment incentives and in the venture class with the venture fund, both of those were being mixed. And I just thought, why is that the case? Something's going on here. Of course, the state has political motivations and political interest in funding things, but it occurred to me that there must be a cause. There must be a reason that venture capital funds remain on the coast, remain substantial on the coast, and why the Texas ecosystem seems to be challenged when it comes to raising as much money to allocate to entrepreneurs. And what was born of that original idea was this thesis that if you look at the major hubs of any economy, there is a sophisticated approach to economic development of that industry, soup to nuts, all the way from the ground up. You see it in, let's use Houston as an example. You see trade associations for the oil and gas industry. You see a region of Houston that's developed for the oil and gas industry. You see the supply chain well developed for the oil and gas industry. You see investment on the part of the companies, both in clean tech and new forms of energy, as well as certainly in putting more holes in the ground and building pipelines. Point being that in that region of the world, it dominates and therefore pulls in capital and attention and human resources. Because was the idea, because it develops every layer of the industry, from early entrepreneurship and R&D all the way up through corporate development and corporate innovation. And I looked at Texas as an ecosystem and thought, are we doing that well in other cases? And if so, great. Can we expose those? If not, why not? Are there other circumstances where we could be developing the industry much more effectively and drawing in capital? And so the thesis was that the investors, and I think this holds water. I've never seen anything to counter the point. The investors are going to prefer first the region of the world that appears to have the predominant strength in a specific vertical. And startups and technology is not an industry. There are verticals within startups and technology that get funding. And so Silicon Valley is another great example of that, in the sense that the search industry there, or the social media, the social networking industry there, are our most recent examples of bottoms-up entrepreneurship, mentorship, advising, angel investing, corporate investing. The entire ecosystem understands how to build social networks, and so they do that particularly well. What we found, long story short, is that a lot of people moving into the state of Texas were like myself. They were moving out of Silicon Valley, they were moving out of New York, and they were moving out of LA. And interestingly, if you think about those three regions of the world, what they're bringing with them into Texas is media industry experience. News, media, and advertising in New York, music and film and other arts out of Los Angeles, and of course, online media by way of Silicon Valley. All of that experience is coming into Texas and colliding in a place where we need to do something new. We need to do something different. We're looking back on the way Silicon Valley worked. We're looking back on the way LA works for the music industry and thinking, why would we do it the same way that it's always been done in Texas? Why don't we do it differently? Why don't we invest in the innovation and the technology and the entrepreneurship across media as a vertical, across media as an industry, and recognize that in Texas, we have not only entrepreneurs and startups working in what we call media technology, but we have companies. We've got Hulu down in San Antonio. We've got Condé Nast over in East Austin. We've got Apple on the west side of Austin. We've got companies here that are validating this idea. They're validating that in Texas, there's a creative class of talent and a technical class that loves the media industries, whatever they are, news media or advertising media, it doesn't really matter. Whatever they are, if we can develop that from the ground up and expose it and mature it, then the venture capital will favor this part of the world as having a predominance of opportunity, as having a predominance of experience, mentorship, and advice, to ensure that the entrepreneurs aren't just figuring things out as they go, but that they have incubators and advisors and investors to turn to who know what they're doing and can write the kind of checks that they need to support that ecosystem. So it started with this premise of, what do we do about venture capital? And it ultimately recognized that there's a vertical that I particularly love, which is the media industry.
So you started Media Ventures. What exactly is that all about?
So we actually work in that very context. You might think of us as what's called a venture development fund. We're not a venture fund. We're a venture development fund, which is to say that our job is to help develop the funding for the industry. Another word that's often used in the context of some things we do is what's referred to as a startup studio. And a business model that we have in one of our entities is, in fact, a startup studio, where we put resources directly into startups, human resources, to help those startups thrive. What we do works essentially in 5 different verticals, 5 different contexts of the framework that we've developed for the economy. The first is that we develop people. We believe that for the industry to work well, we have to know who all the people are, all of them. And so we aren't just developing a membership or a social community for media technology. We're building crawlers and infrastructure so that we can figure out who absolutely everyone is who works from sound engineering to video game development. Every person who has a skill set in this industry is important to know. Second, we work in education. We've got a nonprofit that is fostering workforce development and startup incubation within this industry in particular. And so we teach web development, we teach marketing, we teach media production, and likewise, we help develop startups in this industry. We develop real estate. We believe that industries have to have real estate hubs, and so we're opening a large space in East Austin and opening podcast studios and other studios throughout the country to help enable people to use the infrastructure that they need to be successful. We develop platforms. We've got a team of developers building out IP that's used to help startups and entrepreneurs and mentors and advisors and investors make the right connections in this industry. And lastly, we promote the industry. Like my example of Houston and the oil and gas industry's trade associations, or if you think of Hollywood and the Oscars and Variety magazine, an industry does not work if it's not promoted as an industry, as a hub for the world. And so we're building out radio, print, web properties that are fairly altruistic. They're for-profit entities so that we can operate them, but they're fairly altruistic in the sense of doing their best, level best to promote what's going on in the ecosystem so that, back to the first point, so that ultimately investors have a greater degree of confidence that they can and should participate.
So what kind of capital do you need to form to really support that type of operation? Are these seed funds or Series A? How are they structured in order to support the media type deals that you're putting together?
Yeah, great question. We actually work across the board intentionally because, again, our focus is on ensuring that the industry exists to support the economy, to enable the returns for investors. And so we work in the public sector. We are writing grants and developing sources of funding at the city level, state level, and federal. We do that through our nonprofit. We are certainly developing venture funds, traditional institutional venture funds, but we're doing that for the most part with existing funds. We're looking at the creation of sidecar funds with existing venture capital firms. We're looking at the creation of specific vehicles through equity crowdfunding platforms that are dedicated to just this vertical. So you can think of developing a portfolio just in this space if it's a space that you're interested in. And then we're even working with corporations. Of course, the corporations, particularly in media, think of Warner, think of Apple, think of Google. They spend a tremendous amount of capital on innovation, R&D, and fueling the creative class, fueling media productions. And so we're working with them as well to recognize that the entrepreneur class, the startup class of the industry, is a place where Warner Brothers, Universal, Time, the New York Times, any media entity can and should be looking for ways to foster innovation within their own business by funding outside opportunities in this startup community.
Is it open to all investors, or do they have to come from certain areas such as bringing expertise or bringing other skills to the table, or is it open to anybody that wants to participate?
Yeah, great question, because what we want to foster is an industry that's, of course, open to everybody to participate. What we're trying to do is recognize, again, that the traditional business models on the coasts aren't as innovative as they could or should be, right? They're stuck in the business models that they've always had. And so we want folks that want to participate in the future of the economy, participate in the future of the industry. We want those folks involved. But to be frank, we're only a few years into this. We're only a couple of years into this. And so we are, for our sake and because of our need to get things well developed and off the ground, we focus on folks that have experience in the industry. But it's certainly open to everybody. Anybody who'd like to participate with media technology companies, innovative companies in media. We've got some incredible folks on the team, like Ted Cohen, who ran A&R in LA for decades. Some incredible folks on the team who know how these kind of companies work and thrive and succeed. So we can train, we can teach, we can support. Anybody's got an interest. But for the sake of efficiency, for the sake of getting off the ground, for the sake of ensuring that our investors are also familiar with how things work and also familiar with what it takes to support these entrepreneurs, we invest our time in those folks first while we figure out how to support everybody else.
What are the core technologies that really drive this sector of the industry? Is it software? Is it AI? Or is it something else? What are the technologies you monitor and map into your programs most?
Wonderful question. There's a great economist out of Florida by the name of Richard Florida, ironically. Richard Florida writes about what's considered the creative class of the economy. And about 20 years ago, he noted that only about 5 or 6% of the economy worked in the creative class. And in the last few years, last report I saw was a few years ago, last few years, we're up to about 20% of the entire economy working in this so-called creative class. And Jack Ma from Alibaba even reinforced his point, and this idea of the creative class is that the coder, the raw technology skill set is, unfortunately, but understandably, a commodity. That ultimately the purpose of AI, the purpose of robotics, the purpose of automation is to replace those things, replace that kind of work, because code is just a language and artificial intelligence can ultimately figure out how to develop that language. And so what Richard Florida and Jack Ma have pointed out is that the only way that any of us are going to be able to succeed in the future, and arguably even in the present, is to have both the technical skill set and the creative skill set, whatever that creative skill set is. Could be a designer, could be a musician, could be a historian, right? Who's got a creative interest in telling stories about the past. You've got to develop this creative skill set in our working professionals now and certainly in the future. And so therein, Hall, is kind of the answer. The technologies that we look for and support are those that recognize that. They're technologies that support the creative class. Let me give you a couple of examples. Certainly things like Spotify and iTunes are media technologies, right? It's music technology. Certainly what the work being done in VR and AR is media technology. Where that space gets interesting to me, though, is not in entertainment. We're not seeing a tremendous adoption rate of VR for entertainment. We're seeing it in verticals. We're seeing it in healthcare. We're seeing it in sports. We're seeing it in verticals where, because of the way they teach the medical industry, VR and AR has some wonderfully interesting applications. VR and AR is still media technology, even though it's being applied in healthcare. Here in Austin, my favorite example is WP Engine. And that's not a company most people would necessarily think of as media technology. But fundamentally, that is technology. That's software. It's infrastructure that enables designers, web developers, content producers, book authors. It enables people to very easily create sophisticated web experiences, websites. So WP Engine is a wonderful example as well of a company that reinforces this idea that we have to figure out how to put the creative class to work through technology. That's what we really focus on and favor in Media Tech Ventures.
Well, you're also involved in the Founders Institute and bringing that here to Austin. Can you tell us more about that?
Yeah, are you familiar with the program? It's about 10 years old.
Yes, I'm very familiar with Founders Institute, and it's a very well-known, well-thought-of program.
Yep, it's one of my favorites. It started about 10, 11 years ago in California, in Palo Alto. Adeo Raci and Elon Musk were a couple of founders, Elon, a couple of the early guys involved in the Founder Institute. And it's fundamentally based on a premise that an incubator, not an accelerator, to be clear, and I'll clarify that if we want to, but an incubator, the very seed stage of a startup, benefits most by providing to the founders a structured, rigorous curriculum. It's less so a mentorship kind of network or a mentorship kind of program, and it's more so a class. It's more so a curriculum that the founders have to go through in 12 to 14 weeks, depending on how we develop it. So we launched it in Austin last year, very successfully. I'm thrilled. We had about 35 folks start the program, and we graduated 8 great companies that are now chasing funding and working with the accelerators like Techstars and Mass Challenge to grow. The reason I was so passionate about bringing it here is that, frankly, their mission statement is, in fact, to bring Silicon Valley to the rest of the world. So culturally, the way the program works, the mindset of the program is that of building disruptive technologies, building companies that are fundable, ensuring that the founders who come through the program intend to seek funding and don't avert funding. Then it's not that the Silicon Valley mindset is necessarily the right way to do things. It's more so just that it's a curriculum, it's a program that's designed to say, look, founders, most of what you're thinking about is going to fail. Let's fail it fast so you don't spend time on stuff that isn't going to work. Let's make sure we're not building what are called zombie startups that are just moving along on life support and can't really ever make the right turn. Let's focus on things that are going to not only need and want, but serve investment and deliver much more substantial returns for the venture capital ecosystem so that, as we've been talking about in Texas, so that we can start to build some more companies here that pull in money from the rest of the world, deliver sizable outcomes to this region of the world, and enable the entrepreneurs here and the investors in this part of the world to then raise more capital on behalf of what's going on in Texas.
Well, if you started with 35 companies and graduated 8, it sounds like a very rigorous program.
It is. So it's also, though, a very supportive ecosystem in that there's no fixed cost, by which there's a fee to be in the program. But if you drop out within the first few weeks, you get your money back. If you drop out after that, or if you get removed after that, you are effectively always an approved founder in the program. And the idea is that, look, your startup isn't working this time. It's not going to work this time around. Why don't you go back, tool it some more, play with your ideas some more, come back in the next cohort. You're already accepted. You've already paid for it. Come on back and let's get you through the program next time. We're trying to tease out the ideas that become companies. And to support that, the program is designed around a warrant structure upon graduation, as opposed to an equity allocation upfront. The idea being that nobody allocates anything to the program, nobody allocates anything to the directors or founders, unless we actually achieve something viable, unless we actually develop a successful opportunity. At which point, they're really only warrants. So it's not even equity, right? We don't have ownership on the cap table at this stage. The warrants are designed to ensure that we're then pushing this company to the venture capital ecosystem to get acquired, to go public if possible. And to do that, everybody in the program, the other startups, the mentors, the directors, everybody in the program gets a share of those warrants. So we end up building a very tight-knit cohort, a tight-knit community in which we're then constantly supporting one another so that those companies find some success. And yeah, there's a high dropout rate. We had two, though. We had two founders in the last program join other founders in the same cohort because they recognized that their startup, their idea wasn't necessarily going to work, but hey, look at that one over there. I'd really like to do that with them. Let's partner together. Let's develop this early founding team for this business, and let's take that to market. It's designed, as I said, it's designed to ensure we're building companies rather than just bringing founders to the market who then try their level best for the next few years to try to get something to work that isn't going to work.
Well, it sounds like it's designed to work very well with the natural evolution of pivots that come in startups. So you get a few shots at it before you really launch out into the world. And then there's also the cross-pollination that comes from incubators in that people are sharing ideas and they're sharing people and all those good things that help form stronger companies at the end of the program.
Yeah, that's exactly right. And that's also by design. The curriculum literally starts with ideation. The first week is an exercise, a tool set, and some talks, mentorship about, do you even have a viable idea? Have you thought about it? How have you thought about it? How have you written it out? And then an important piece of advice that I always give, and I rarely see, have you talked to 500 people sitting in coffee shops? Not your peers, not your mentors, not folks in the startup community. Have you talked to 500 random people about whether or not you've even got something that's interesting? In the very first week, that's expected of everybody. And so you can imagine that in that very first week, you get a lot of folks who then do that and go, well, it's a neat idea, but nobody seems to think it's going to work. So maybe I shouldn't invest my time in it. The second week is from customer validation to market validation. And so we dive into how to do market research, competitive analysis, and so forth. We haven't even started to talk about MVPs or funding. We haven't talked about how you're going to make money because none of that matters yet if you haven't first figured out whether or not there are potential customers and whether or not the market can sustain what you're doing and is interested in what we're doing. So we developed the curriculum in a way that, weeds out, in a positive way, weeds out stuff that really shouldn't necessarily be in market anyway, so that when we get to that graduation point, we can, with a very high degree of confidence, put these founders into the accelerator partners that we have and into the angel network that's a big part of the Founder Institute program.
Well, that's great. Well, in the last few minutes we have here, what did we not cover that you'd like to cover today? We talked about media ventures, talked about the Founders Institute. What else is on top of mind?
Well, so I would add that we're in Austin. You and I are in Austin. And what you'll see in what we're doing in Founder Institute, the approach that we take in media tech ventures and frankly, personally, and we've said it throughout the podcast, I like to think much more in terms of Texas. I think if investors in your audience, your partners, folks considering moving to this part of the world, if they realize that the Austin startup ecosystem is not comparable to Silicon Valley or the Northeastern Seaboard, frankly, because you're comparing a city to a region, but the region of Texas certainly rivals anywhere else in the world with regard to what's going on in innovation. And so what we're starting to develop in Founder Institute with programs like Mass Challenge here, what we're looking at in media tech ventures is this opportunity to recognize and appreciate that San Antonio, Houston, Dallas, and Austin have these distinct strengths and frankly weaknesses, but those weaknesses create opportunities for entrepreneurs. That when we work together, when we here spend time on the road, we invest a little in Houston, we get up to Dallas comes down here for South by Southwest and so forth. It's then that we can really develop these companies that are ready to take on the world stage, ready to serve venture capital, wherever it might come from throughout the world. So I also work in the Texas startup ecosystem and develop the Texas startup platform on Facebook and some networking groups there. I'd love to encourage that everybody listening, think Texas first. I want to know what's going on in Texas. I work in clean tech or I work in energy. There's a lot of that in Austin. There's a lot of that in Houston. And it's critical. It's important to appreciate that in being in this part of the world or investing in this part of the world, understanding that larger market, this region, is really what's going to make you successful here.
Well, Texas is 10% of the population, and when they all hang together, it really can move the needle. It's just getting everybody to hang together seems to be the challenge. Often it's 4 Rhode Islands rather than one state that usually comes out. And it doesn't have as much impact when it's 4 separate groups, of course. How do you pull them all together?
Well, I think we apply the same philosophy that we applied to media tech ventures to other industries that are exceptional. There was an article in Bloomberg just last week about how Texas is not and should not be Silicon Valley. And I don't remember exactly what the title was. I'm sure we can share it when we share the podcast. But the article noted that what's going to make Texas unique is recognizing and understanding that there are certain industries that places like the Valley just have never been able to innovate and develop at scale. Things like truly education. Certainly we have platforms like Chorus and Udemy that are coming out of technology. But if you think about it, K through 12, the college education system, education at large really hasn't changed at all in the last 30, 40, 50 years. Texas, though, is a market in which the great majority of capital in education comes from. And with those 4 large cities that you're referring to, any education ed tech startup in this part of the world has access within 2 hours to an extensive number of world-class K through 12 schools, university systems, community colleges, and so forth. When we look at different verticals like media technology, like education, like politics, like energy, I think we can then really start to unify this region, because what Texas needs to figure out how to tie those cities together is a path forward, a vision, a plan that says, look, this isn't about the Austin startup community or the Dallas startup community. This is about energy and clean tech, in which Texas is dominant in the entire world. Forget that we have 10% of the population. Texas does almost everything with regard to that specific vertical. Or look at all the people moving into Texas who've worked in the media industry. If there's any place that's going to change the way media works, fix the fact that news can't seem to make money, fix the fact that advertising still seems to struggle a little bit with monetization, it's going to be Texas, because we're pulling in experience from the traditional industries, both coasts, and those people are bringing with them networks and connections and people and investors who want to do something exceptionally innovative. It's going to happen throughout the state because people are moving to all parts Texas.
Well, great. Well, we're at the end of our time. What's the best way for people to get in touch with you?
Great question, because with a degree of regret, it's one of my talking points when I talk about marketing. My handle on the internet is SEO Brian, because my last name is O'Brien. So if you look up SEO Brian, I'm the easiest guy in the world to find. I'm all over social media. It does not mean that I do SEO, is the talking point that I give. It's an old legacy handle from when I did a lot of work with Yahoo and HP in the search industry. So SEO Brian's the easiest. I've got a website there. I've got a Twitter handle. I've got a Facebook page that shows up. And I love spending time and connecting people and even mentoring and chatting online. So all you got to do is ping me and we'll have a conversation.
Great. We'll add that into the show notes and look forward to having you come back and explore more of these issues as you go forward with it. Thank you so much for taking time to join today.
My pleasure, Hall. It's been a distinct honor. Thanks a lot.